Good morning, traders, and a happy Tuesday out there to everyone. Another day in the works here. Hope everyone had a good evening. Got ourselves a nice Tuesday kind of lining up in front of us here. Should be an interesting one. We have our Europe participants back in order there in terms of being off their bank holidays. So we got those back in shape there today. Good to take into account. So our volume levels likely will be a little bit more normalized if we would. But with that said, outside of that, good to note our board today, as far as like the calendar goes, fairly light on the economic calendar side of things. The earnings calendar, on the other hand, has a couple items in the queue. I believe it's the Tesla earnings after the close there today. And we had a couple in the pre-market. I think it was Verizon and a handful of others. So just good to take into account again for those equity traders out there. Always good to note. So don't have to worry about any you know unforeseen movement. So we had Verizon, Halliburton, Tesla after the close today, Capital One, etc. So a few handful of items on the board, and then our economic counter is pretty light, just a mild 830 figures there. That we have due out from Canada, and then a couple speakers along the way today in Richmond Manufacturing Index at 10 o'clock Eastern, right at that morning inflection point. So, regardless, let's hop on in here to our daily chart, see as to what we have lining up here for the session in front of us. Right? As we know, we had decent range expansion coming out of inside range bar during yesterday's trading. We did have that instance of closing off of our lows, right? So we have yet to see any retrading back in towards yesterday's tail. So we're kind of keeping an eye on seeing if we're able to form any degree of continuation patterns, whether that be like an hourly or a 120-minute bear flag. As of the moment, we've been filling out an inside range bar. I wouldn't be so concerned with daily 5 SMA. It does come a little bit of a ways up above 52.92, but we're not really on a persistency of trend or extended run, so it doesn't hold as much weighting as it would for something such as the gold or the euro currency, which have that better feeling of the persistency of trend. So, with that said, we did do a little better job on filling in some of the structural work from the initial range expansion bar. We know that the Dow did a complete fill of its single prints, whereas we started to poke into it with the S&P but didn't do a complete fill. That would have been closer towards 50.87 and a quarter for our purposes in the ES. So as of the moment, filling out some range, still would be monitoring, or at least having on the sheets what the previous day's low comes into sight without getting the charts too crowded or clustered. I don't want to get them too overlapped, but we can just mark it red with the prior day's low, and we'll open it up just a notch. We can see we've kind of come up in this two-part wave. Very mild. You see how the oscillator kind of plateaued because the momentum has contracted quite a bit. But regardless, as we come back up, I am still viewing this 52.8650 as a valid point of interest. We have those two data points up there, which served us quite well initially. We accelerated through it. We formed a little volume node around it. So even if we do come up any further, we'll be viewing this 8650 as a little bit of overhead for them, and still would be keeping an open mind just in terms of if we do want to do a better job having this 120-minute chart do any additional testing back down or form more of this bear flag composition, in which case we have that previous day's low and that 46.75 previous spike low that can still be monitored. Again, 86.50 or the overnight high are going to be our points of interest that, kind of loom up above, if we would, in terms of the composition. So, again, if we go down to this kind of lower time frame display, this two-part wave, or A, B, C up off the lows, we can also do the liberty of marking off the top of this complex consolidation wave, We'll also just do it with a dash line. Again, really trying to not get too overly cluttered with the charts, but it still will remain a good point of interest because if we do ultimately take out the 54 half, right, then we'd have the overhead there of that 86.50 that comes into sight there as well. So as far as the S&Ps are concerned, and yes, actually a good extra point to take into account the old gap area that we had left there as well. Also, always noteworthy to take into account where we have the blank space in the data. So, plenty of reference points to work with along the way. Just taking into account the nature of how we had the expansion out of balance yesterday, and thus far we have yet to retest or take out that prior day's low. Although we did have an instance of this in the past as well, where we had the expansion out from balance, we formed the inside range bar, and then got the test on the secondary day, where we're kind of having a little deja vu, right? Range expansion, so far inside range bar, and that leaves that previous day's low still looming down below. So we'll bring back the hourly charts after we get through some of these other groups, but for now, I think those will be good ones to take into account. EC, the euro currency, next into our queue. Not too much to fault on behalf of the EC. Blue box area on the 5 SMA oscillator down below just to indicate our closings. Set of 3, 6, 7 on the close yesterday. Today, of course, would be day 8. That is, if we're able to close above 114,465 in the case of the euro currency. That would establish us on that count or threshold of day 8 for themselves. We have indeed done some work, right? We closed well above it yesterday, but I've since retraced and have done some consolidating around 115, 175 visible data point in the form of a spike high. That still needs to be taken into account on behalf of the euro currency. We did, of course, as well come in with the gap on the 8 a.m. reading, as we saw in Linda's displays there yesterday, alongside with many other markets. Right, that was a bit of the theme during yesterday's trading. We can even see just from some of the readings that we had, the fact that we left some blank space. Again, the fact that we're on the testing, doing some work on the other side, that 115, 175 is still noteworthy for the euro currency. And essentially, I'm sure we'll probably see some of these items on the market profile view as well, due to the fact that we had the urgency unfolding or the one time framing mode occur in the Globex session or the pre-market. As we come in and do some work on the other side of 115, 175, we're essentially filling in some structural work and trading back in towards the gap area a little bit. 114,675 is quite a ways further down below, but certainly would be a nice reference point to have on the sheets if we do proceed to come down any further. This is the similar complex corrective wave that we saw on the S&P. This ABC type of rhythm down, unable to fully make a new high, so taking out the bottom of the structure just gives us a little bit more leeway to work with. So referring to the hourly charts and the zone where we came up through the area fairly impulsively, and the 14,675 is in reference to our old spike high tail that we had built out, so allowing for some leeway or room to roam in the case of the euro currency. And with that said, we still want to monitor that 5 SMA daily for itself. All right, that's what we're working with on the euro currency. And as we know, the GC as well is on its persistency of trend, right? Or extended run closings on one side of the 5 SMA, however we'd like to frame them out. With the GC, right at our set of 3, our 6, 7, and day 8 on the close yesterday. So we're 1 day in front of the euro currency, if you would. Additional nice showcasing of extra work that has been put in from the gold. Just like we had with the euro currency yesterday, we also have the 8 a.m. reading to take into consideration on behalf of the GC. Opening with our gap above the prior day's high. It's always noteworthy to take those items into account, coming in at 3442.3 in the case of the GC. And so if we come in and narrow down any spread, I want to see how we trade off of 8 a.m. reading. For now, we've been trading a little bit on both sides. Still noteworthy. Alright, we had a pretty decent reading. We can see how this shows up on our actual intraday data itself. and we'll plop it with a green indication, just so we can note that it is the prior day's high. As of the moment, not too much to fault on their behalf. What we can take into account, however, from where we last left them on the close yesterday, remember discussing the hourly display of data, what we have done was kind of gone through this positive consolidation phase where we came down, traded a little bit sideways, move towards the hourly moving average, and then have proceeded to get nice fresh momentum reading. So we worked off any degree of loss of momentum without damaging the integrity of the up move. Again, seeing that we're on extended run, obviously the long side is going to be more favorable in its composition and its response. So GC continuing to keep itself sustained. We can monitor if we do pull back any deeper, see how we would trade around the previous day's high. But point being, in terms of the composition here on something like a 60-minute chart, we corrected the rhythm, right? The slow line is still going through a corrective phase without damaging or hurting the price all too much. You can kind of go through a similar instance on a 120-minute display. So again, these are just mean reversion properties, not necessarily any type of trend reversal, right? It's just pausing and little checkbacks along the way. We can see our last instances again. I think the 60-minute chart really shows this rhythm very nicely, right? We worked off our sell divergence, we pulled back, we ultimately formed bull flag, still to come in and trade higher, vice versa, just as how we did yesterday evening as well. We worked off the hourly divergence, traded by going sideways, hit the moving average, and then still proceeded to have a nice fresh additional leg up, putting in an overnight high of 3509.9. You could probably call it 3510 for all intensive purposes. So again, we'll monitor pullbacks likely to still be met with buying, but we do have the 8 a.m. reading gap area to take into account. Again, this likely will show up on the market profile view as well, just kind of like we saw with the euro currency. Alright, so good spread as of the moment, just kind of dipping their toe into it, but plenty of room to roam, right? A lot of the activity has been unfolding in the Globex session on behalf of the GC. So that's top down daily chart extended run to the upside, a 120-minute time frame, and then furthering and following up with the 60-minute display that we left with on yesterday's close. All right. The crude next into our viewpoints. Actually, we'll start here with the top down as well. With the crude, and drum roll, as we well know at this stage, right? We've been trading into the old infamous big gap area. We saw it on a couple different metrics, USO, UCO, and the 8 a.m. reading only view with the crude itself. We traded into the point last week on Wednesday. Thursday we had our brief pullback, maintained and held, and then yesterday on Monday's trading, a little pause and rotate. The start of that initial zone was 63.53. Right, so we managed to trade into it briefly, and then we could see as far as the basis on the continuity or the continuous basis for the 24-hour data, we formed ourselves a high to low day yesterday. We have been working very mildly, mind you, with some closings on one side of 5 SMA daily. So nice breakout mode coming into the session here today. Even though we've already taken it out, 63.53 should still be monitored as a good reference point, coupled with, drumroll, if we open up the data, right? Because we can recall at the time how key it was taking out the prior swing low. If we were to come in and do any healing, right, to serve us as a nice overhead point of interest, 64.5, nice visible prior swing low in the case of the crude. That would be noteworthy if we did try and have some better expansion coming in on the upside. If we are able to take out the 2-day high, 64.5 would loom up above as a visible point of overhead. However, since that's still a ways up above, what we can do is fine tune the visual. Right, the 60-minute charts, in the opinion, serve us quite well. We saw this as well during yesterday's trading. What we were working with initially on the two-part wave down, right, with respect to the oscillator's composition. Right, we came down, worked through it fairly well. We saw that the products were on board as well, in terms of both of which managed to trade below the previous day's low at the time, or Thursday's low. Right, we managed pretty well to close up off the lows, and what we have here, 63.78 green to indicate the previous day's high in the case of the crude. Also kind of ties in with the inside pocket area up above. Right. Just grabbing a little extra water, covering a couple different bases here. Right? So with the crude, as we come back up, of course, that previous day's high is going to be a point of reference for us. We also see some of the damage that we had done in the early Globex session. So if we go down to something like a nice tiny 5-minute chart and open this up nice and large, right, you can still view this. Another one I'm sure will show up on the market profile display as a bit of a low developed area, right, that we were able to start to trade in towards. And we can probably use a 15-minute chart to narrow it down just a little bit. There we go. Close enough to match up our box. Looking to the right-hand side as far as where we're trading here at the current, say we filled in most, but perhaps not completely all of the light developed areas, but that's okay. Just pointing out as far as what we're starting to trade back up against. Where I think we still have the most value is monitoring the 60-minute displays of data. Blow it out a couple notch here. Bring it back to normal size, and we'll keep an eye, see if we're able to get some better expansion going for ourselves in the crude. But as of the moment, I do take kindly to the composition on the oscillator, the nature of the two-part wave down, our reaction up off the low, brief pullback, and then our slightly higher high. So starting to form out a little bit of a broader range, two-part wave down, as well as coming back up. So filling out some range and thus giving us that breakout mode coming into the session today. So any further up, want to watch that 63.78 to see as to how we behave coming up towards it. 62.71, however, is visible only if you jump out to the 120-minute chart. That was the original spike high from the trading on the 9th. So also like using that as a bit of a line in the sand. If we start to drop back below 62.71, would not view that as being as constructive in the case of the crude. But for now, giving them the benefit of the doubt, they did carry themselves quite well. No pit session gap area to concern ourselves with. So if again we lose 62.71, then we'd be monitoring that previous day's low of 61.76 on behalf of the crude. Alright, a little bit of a mouthful. The bonds, very well behaved. We have been in the 30 years as well. Kind of reminds us of what we had in the S&Ps. Drum roll, range expansion out from balance yesterday. Right, that's the only reason for having the 112.27 marked off for our purposes. Right, breaking out from balance, kind of like the S&Ps, although the ES has not traded through that previous day's low as of yet. So here with the bonds, we did look below the low and have since formed some counter-reactive lift. However, obviously we have some deja vu because we've been looking at this 120-minute time frame quite often as of late. Big blue box areas, 114.08, 112.29. We did see at the latter stages of yesterday's trading going into the close, we did start to poke below the lower end of our previous congestion zones. However, they did not really do the greatest job on keeping themselves sustained down below. So we're playing some defense or trying to hold the lower end of the range. And coming into the session, might be more apparent, kind of watching the oscillator. It stands out a bit more vividly if we went on something such as a 60-minute display of data. So since we reached to the lower end of the congestion zone up above, if we do try to reach at all between 114.06 and 114.08, those are going to be overhead points of interest to monitor on behalf of the bonds that can still be taken into account. Again, some of this having already unfolded overnight, we view this as a buy divergence that has reverted back above its moving average and does have some room to roam overhead. Bearing in mind again, of course, what we're looking at on that far left hand side of the chart, these congestion zones that we have built out for ourselves in the 30s. As well, if we take the 10 years into account, we can see the 10s also followed suit by getting their follow through or test below their prior day's low after having range expansion for themselves, and likewise have sported a counter-reactive lift, just reintegrating themselves back inside of the previous day's range. But as of the moment, the 30s provide us with just a tad more clarity there on them. Alright, so with that, I'm going to take a couple moments here, get some things back in order. We covered quite a few bases, so I'm going to get a couple things situated on the back end as well. And then we'll see as to what we have lining up here for this session coming up in front of us. I'm going to also just maneuver this crude and put this one on the view so we can keep tabs on itself on a 60-minute chart. We'll keep our S&Ps in the view and be on our merry way here for this Tuesday. All right, lining up in front of us.